Hello, guys. Welcome to our evening live trading session. So this is the session where I'll be showing you guys how you can make analysis, all right, and then giving you a detailed explanation on how you can actually start doing all of this yourself, all right. So this is the session where you need your pen and paper, okay? This is the session where you want to write out all the detailed informations, all right? Because everything I'll be explaining here, everything I'll be talking about here is very important in your journey of forex trading, okay? So yesterday we talked about, uh, you know, we did introduction to the forex trading, all right, and then I said today we are going to be making an introduction to the forex chart, all right, and this is the forex chart. Okay, this is the forex chart. This is how the forex chart looks like. All right, this is it. So let me zoom out. See, this is how it looks like. All right, so now introduction to the forex chart. What is the chart? First of all, what is the chart? So let me write that out. I love writing um my topics out. I just want to make sure that everybody watching this video knows what we are talking about. So like it. All right. So what is a chart? All right. So charts are the main tools of technical analysis. All right. In technical analysis, we use charts to plot a sequence of price movement. All right. So when the price movement of an asset over a certain duration, we use it to plot the price movement of an asset over a certain time duration. Okay. So it is a graphical way of showing the price. So sorry. So take this for example right now. You see the price is moving to the upside. Okay. So when you make the analysis on your chart, that is how you get, the direction of the market. Even though the market is going up right now, doesn't mean that the overall trend is an uptrend. Okay. So this market might just be a pullback, right? We have what we call pullback. Don't worry, we'll get there also. All right. So now talking about the forex chart, we have three type of charts. All right. We have three type of charts. We have the line chart, we have bar chart, and then we have the candlestick chart. Okay, so I'll just be showing you how those chart looks like. So let's start with the bar chart. This is what a bar chart looks like. Okay, I'm not sure if anybody uses this, but this is what it looks like. So whenever you hear anybody saying bar chart, this is what bar chart looks like. All right. It's not so common. It's not so popular. I don't know if people actually uses it, but I don't use it. All right. But if you want to try it out, you can go to your chart and then choose the bar chart and see how it works. All right. So that's the bar chart. Then we have the line chart. All right. So this is how the line chart looks like. Yes, when I was just starting out, there was a time where I used this line chart. All right. Because look at the market right now. You see, this is where I drew my um breakout structure. But the reason why it's here is because this is where the body started from. Okay. So that is why it's very important if you are drawing um if you are when you want to draw a support and resistance box, you have to take it from the body, not the wick. All right. So but don't worry, we'll get there. Okay, we'll get there. So right now just listen to what I'm explaining presently. So this is how the line chart looks like. Also not so popular, but yes, some people uses it. Even I used it when I was just starting out, but not anymore. Right? Then we have the candlestick chart. This is the most popular chart pattern we have. Okay, this is the most popular chart we have. 99.99% of forex traders uses this chart. Okay, so I can say 100% of traders because I don't know all traders, but the most traders all of the traders that I've come across, I've watched their videos and everything. This is the chart everybody uses, right? Because it's not complicated, it is easy. You can easily make your analysis using this candlestick chart. All right. And then on the candlestick chart, so since this is the chart pattern that I use, I'm going to be explaining few things on the candlestick. Okay. So look at this. You see, they look like candle. Okay, isn't it? They look like candles. That is why they are called the Japanese candlestick chart. All right. It was invented by Japanese. Okay. So it is called the Japanese candlestick chart. All right. So and then this is the body of the candles. Okay, the candlestick, the Japanese candlestick, this is the body of the candle. You see this that looks like a stick. Okay, this is called the wick. All right, this is the body and this is the wick. So look at this right now. We have this body, we have this wick. Okay, we have very small body here, then we have a very long wick. Okay, and even you know above it also. So this is the wick, this is the body. Okay, so this is also a wick and this is a body. So this wick can also be called the shadow. Okay, so some will call it shadow. Okay, some will call it wick. Some will even call it stick, but they are still saying the same thing. All right. So now, since I've you guys know what the candlestick, the kind of chart patterns we have now. The next thing is bullish and bearish in the forex market. So let me write that out also because now we move to another topic. Okay, the bullish and bearish market in forex. So what is a bullish and what is a bearish in the forex market? Okay, what is bullish and what is bearish in forex market? So bullish and bearish in forex market. um Bull. Okay, so whenever you hear anybody saying bull, they mean bullish. And then when you hear anybody, any forex trader saying bear, they mean bearish. All right. So they are often used to describe how the overall financial market is performing in general. Okay, whether they are appreciating or depreciating. Okay, so simply a bullish market is used to describe condition where market is rising. That is when the market is going up. Okay, and a bear, which is also known as bearish market, is when the market is going down. Right, it's just as simple as that. So bull, bullish; bear, bearish. Bullish market is when the market is going up. Then bear, which is also bearish, is when the market is coming down. All right, so the full is bullish. When you want to short it, you say the bull market. Yeah. And the bear, which is the bearish, bear is full, while bearish is full, while bear is short. Okay, so I hope you guys get the scope. Yeah, so this is a bullish market. Now on the Japanese candlestick chart pattern, there's a way to tell if the market is bullish or if the market is bearish. Okay, so the green are the bullish candles. When the market is going up, then it is going bullish. But when the market is coming down, then it is bearish. Okay. So I customize this color. The default color is green and red. Okay. Red for sell, green for buy. Green for bullish, red for bearish. But in this case, the bearish is black. Okay, so green for bullish, black for bearish. All right, just have this in your mind. Okay, okay, so let's continue. um let's do Okay. So in the forex market, we also have what we call the going long and going short. Okay, going long and going short. So when you hear people saying, I want to go long in this market or I want to go short on this market, what they mean is they want to buy or they want to sell. Okay, so a long means they want to buy, short means they want to sell. Okay, so if now I say I want to go long, let's go long. That means I'm telling you to go to buy. Okay, I'm telling you let's buy. And then if I say let's go short, then I mean let's sell. Okay, so that is that. Okay, sorry about that. So guys, let's continue. Um, so I hope you guys are following. I hope everything I'm explaining makes sense. Okay. So let's continue. Let's continue with our class. All right. So now let's talk about analysis. All right. Let's talk about analysis. In the forex market, you want to make analysis before you can, actually get the direction of your trade. If the market is buying or selling, before you can actually get to open a position, because you need the direction of the trend before you can actually open a position. If you want to buy, you can just go into any market and buy, or go into any market and start selling. Okay, you want to know if the market is going to sell or if the market is going to buy. And how do you do this? It is simply by making analysis. All right. And then we have three type of analysis. All right. We have three type of analysis. Let me write that out. Let's write it out. The three type of analysis in the forex market or in forex trading. Okay. So let's do that. Let's do that. Yes. So we have the three type of analysis in the forex market. Okay, the three type of analysis in the forex market. The first one is the fundamental analysis. Okay, fundamental analysis. We have the technical analysis, and then we have the sentiment analysis. Okay, so now let's start with the fundamental analysis. All right. So the fundamental analysis is analysis of social economy and the political factor that affect currency supply and demand. Okay, so you see in forex trading, forex is not controlled by anybody but us. Okay, everybody trading the forex market are the people controlling the forex movement. Okay, though a particular currency or a pair of currency is always affected by an economic factor. Okay, an economic factor or political factor of that um, uh, country. Okay, so let's use USD for example right now, which is the United States dollar. All right. So if United States dollar is experiencing an economic factor, is going to affect the supply and demand of USD. Okay. Likewise, if the experiencing a political factor, is also going to affect their country currency, that is, which is the USD, the US dollars. Okay, so that is how fundamental analysis works. And then before you can actually become a proficient forex trader, you need to know how to make your fundamental analysis. Okay, these are simply just you going to look out for um, an economy calendar, okay, or an economy news. Okay, so if you love trading, maybe you like trading any pair associated with the USD, then you want to start looking for news on USD, okay, on the United States dollars. You want to see news of a daily news of what is affecting the USD, if the USD is going to depreciate or if it's going to appreciate. Okay, so when you get all of this scope, then you can come down to make technical analysis. All right. So now talking about technical analysis. Technical analysis is the analysis you do on the chart. All right. So it is the study of price and volume movement. All right. That is how you get to know your uptrend, which is bullish, your downtrend, which is bearish, and then we also have what we call sideways market, which is a consolidation phase. We will get there. All right. We will get there also. So technical analysis is what we are going to be focusing on majorly today. All right. Then, but before that, let's talk about the sentiment analysis. Okay. So now, sentiment analysis is it deals more with your mindset, okay, and the sentiments of traders. So now let's assume that this is XAUUSD, which is gold USD. Okay, so this is the gold market. So now, imagine because of what I'm saying here, I refuse to make further analysis. Okay, so I refuse to make further analysis, but I just start getting sentiment over this gold market. Okay, maybe I just start saying, okay, this market is going to buy because of what I'm currently looking at here. Okay, so I have this line, and then this market has been rejecting my line um, for over 4 hours now. Okay, so I could just get sentiment and say, I think this market is going to buy. So when you start thinking, that means you are getting sentiment. That is what sentiment analysis is all about. Okay, and as a forex trader, you don't want to get too sentiment over a particular pair or a particular instrument. Okay, so that is why I don't think sentiment analysis for a forex trader is that important. Okay, the most important ones are the more fundamental analysis and the technical analysis. Once you are able to get your fundamental analysis and then you come to the chart to make your technical analysis, then it is a go for you. Okay, so once you get your technical analysis right, you already know what is happening in the US. You know the market, the US dollar is very strong today. Okay, then the what you want to be looking out for is okay, if I'm going to be trading USD today, then I you obviously want to buy the US dollar, okay, because it's going to appreciate since it's stronger. All right, so that is what fundamental analysis is all about. All right, then um coming to the chart to make the other analysis where you say, okay, this is where the market is going to start buying from, because the US dollar is very strong today. So this is where the US dollar is going to start buying from. That is the technical analysis. All right, so now let's talk about technical analysis. All right, let's talk about technical analysis. Now, in technical analysis, we have different tools that is needed for technical analysis. All right, we have different tools that is needed for technical analysis. So the first is support. All right, we have support and demand, support and resistance. Okay, also known as supply and demand. Support and resistance, also known as supply and demand. Let's write that out. Right? Let's write that out. So okay, let's do it this way. Yes. So you see, support, also known as demand, and resistance, also known as supply. All right. So now, support and resistance. What is a support and what is a resistance? Support occurs where a downtrend is expected to pause due to concentration of demands. Okay. So what this simply means is that a support occurs where a downtrend is expected to pause. All right. So I'm going to be making illustration of this for better understanding. Okay. I'm going to be making illustrations. So support occurs where a downtrend is expected to pause due to consideration of demand. All right. So what this simply means is that now let's take an example here. Let's assume that we have a market, okay, coming down. Because what is the definition of our support again? Support occurs where a downtrend, okay, the market is coming down, is expected to pause due to concentration of demand. Um, so let's do this. Let's say we have a demand here. We have people around this area that they want to buy. Okay, this is our support. Okay, this is our support area. We have buyers here. Okay, anywhere you hear support, okay, so this is our demand area. Okay, so what demand means is that there are a lot of buyers in this area, in this particular point. Okay, the people here, they want to buy the market. When you are selling, they want to buy. Right. So now what is going to happen is, you see, so let's assume this market is coming down. The market is coming down. The forex market doesn't go on a straight direction. Okay. It's always creating something like this. So look at this. Look at the example here. You see, doesn't go on a straight line. So you see, the market got into the support zone. All right, and then it just starts buying. Okay, it starts buying. Yes. So let me move this. Okay. So he got into the support zone and then it starts buying. Okay. All right. So this is how it goes. And then it continues to buy. Okay. You see what happened here? The market paused when it got here because of the concentration of demand. All right, this is where the support zone is. So support happens where there's a concentration of demand. That is that particular place. There are so many people that wants to start buying. All right, the bigger boys, the financial institutions, they want to start buying the market. All right, that is why there's a support around this area. Okay, so now it's just opposite for the resistance, the for resistance. Okay, resistance or supply, anyone you want to call it. So now let's assume that we have a resistance around this area. Okay, let's say we have resistance around this area. Okay, so and then the resistance occur where an uptrend is expected to pause temporarily due to concentration of supply. Okay, resistance occur where an uptrend is expected to pause temporarily due to concentration of supply. Now, what this means is that let's assume we have a a buying market, okay, because it's a concentration where an uptrend is expected to pause. Okay, what this means is that if we have an uptrend, the market going up, okay, the market going up, concentration where an uptrend is expected to pause due to concentration of supply. Okay, so that means this area there are a lot of sellers on the resistance area. Okay, the demand area there are a lot of sellers there. So what is going to happen is immediately the market gets into a resistance area, the market will start selling. Okay, the market will start selling. You see what is happening? You see the market is selling to the downside after touching the resistance area. All right. So this is how resist support and resistance works. Okay. And you as a forex trader, what you are expected to do is when the market is in your resistance zone, you want to sell. And when the market is on your support zone, you want to buy. It's just as simple and easy as that. Okay. So I hope you guys are getting the scope. Yes. So aside support and resistance, aside drawing support and resistance this way, there's also what we call trend line. Okay. They are also support and resistance, but they are drawn differently. So let's assume we have a market going up. Okay, let's say we have this market going up. We have a market going up this way. So this is a market, okay? You see, you want to draw your support and resistance, yeah? So this is your support. That is because when the market got there, what happened? The market started moving to the upside. Then you have your resistance here. When the market got here, what happened? The market, paused. So this market is expected to continue to go down because this is a resistance area and this is a support area. Okay. So now, as a forex trader, whenever you have a support area or a resistance area, when you have a support area, you want to start selling. Okay. Sorry, when you have a support area, you want to start buying, and when you have a resistance area, you want to start selling. All right. So every time there's a support, the market will always do something like this. Just a moment, guys. Okay. So now this is where trend line comes in. Okay. This is where trend line comes in. You see, you want to get an opportunity because this market is going up. Okay. So as a forex trader, you are either buying or selling. All right. So sometimes the market will do something like this. You have a support here. That is why the market started buying. And then when the market wanted to come down, what happened? It continued to buy again. That means we have another support here. Okay. So what you want to be doing is you are looking for opportunity where the market to actually do something like this. Okay. So maybe the market went up. Okay. Then you drew this line out. All right. You are expecting the market to come back into that area because you have a confirmation that there's a support around here. Okay. There's a concentration of demand. So you know that the market is going to buy. All right. And then when this market was going up this way, okay, you drew this out, waiting for the market to come back. Now, when the market came back here, what you want to do is you want to buy to the upside. All right. You want to buy to the upside. Likewise, this also. All right. So let's assume the market has made this earlier. Now, all right. This is our resistance zone. And then the market is here. Okay. So what you want to be looking out for is since there's a confirmation of resistance, there's a concentration of supply around this area, you know that the market is going to sell again if it comes back here. So you want to wait for the market to come back into the resistance zone, and then you sell from there to the downside. All right. But now I want to teach you another thing. Because waiting for support and resistance sometimes might be tiring. Okay. So let me not lie. You'll not be getting opportunities to buy and sell every time or every day. Okay. Opportunities are unlimited though, but sometimes it is limited. Okay. So now when we have a market that is trading to the upside, which is a bullish market, this market is currently buying. Okay, this market is buying because how do we know it's buying? There are a lot of ways to actually confirm a market is buying. All right, we have what we call market structure. All right, we have what we call market structure. So when the market is moving, the market is always creating structure. It's either it's creating a buy structure or a sell structure. Okay, the market is always creating a buy structure or a sell structure. So when the market is creating a buy structure, then you want it to break a high before you buy. Okay, or if a market is creating a low, a down structure, then you want it to break a low before you sell. Okay, so what I mean by breaking a high is, look at this market. You see the market generally is going up. Yeah, but here we have a high, we have a low. So we have something like this. High, we have high, we have low. Okay, so let me just do another one. Okay, all right. Um, let's do another one. So let me just copy this instead of, let me just clone this. Clone. Let's have another one here. We have this here. Okay, so let's clone again. We have higher high. Let's clone again. Then we have the highest high. Okay, so here we have higher low. Let's clone this. This is low. Okay, this is a low, but we have higher lows. Clone this. Move it here. Let's clone it again. Then move it here. So now, look how the market has been moving to the upside. Okay, this is where the market started from this support area. Okay, so the market is always moving. If the market is an uptrend, the market is always moving, breaking structures to the upside. And when the market is breaking structure, it will keep creating higher highs and higher lows. Okay, so what this simply means is that, look at this, we have this low. Okay, because this is the lowest of our market right now. This is just for illustration purpose. Okay, don't worry, I'm going to show you how it looks like on the chart. So this is our lowest low right now, and you see how the market made a move to the upside. It moved, creating a high. Okay, created a high for us. This is a higher high, because aside this high now, there's no high other than this high. All right, then the market came down, created a higher low. How is this a higher low? This is a low, this is a low, but this low is higher. Okay, you see this one is low, this one is higher low. I hope you understand the English. So this is a higher low, and then the market moved up. Okay, and when it was moving up, what happened? This is the previous low. The previous low, yeah, this is the previous high. The previous high got broken to the upside. So now that we have a break of high, what does that mean? We have a new higher high. Okay, and then the market came down again to create a low, and then it is another lower, a higher low, because this low is still higher than this, why this is also higher than this. So this is another higher low, and then the market still went up again. This is the recent high. Yeah, the market moved up again to break the recent high. Okay, the market moved up to break the recent high, breaking another higher high. Okay, creating another higher high, and then coming down to create another higher low. So this happens when the market is, moving to the upside, the bullish movement, uptrend movement. Okay. So now, as a forex trader, the opportunities to actually take trades here is you want to be following these higher highs. Once you have the scope, once you get the confirmation that the market is an uptrend, it will keep creating higher highs. What you want to do is, after the market breaks a structure, that is when it breaks a high, because you want to buy. Okay, anytime the market breaks a high, you want to look for where the market actually broke out. Okay, you want to mark it out. Okay, you want to mark it out. The market is going to reverse from the last low. Okay, where is the last low? The last bearish market. You know, this is a bullish market. Okay, so anytime the market breaks a structure to the upside, the market will always come to retest the last bearish movement. This whole area is the last bearish movement. Okay, this whole area, because the market sold, bearish movement. What is a bearish market? Selling market. So the last selling market, the market will come back to retest it before it continues to the upside. Guys, this is a very important information. I don't think I've ever teach this on this live stream. I think this is the first time I'm making examples with this. Okay, because it's a premium way of trading. Okay, so if you are here today, you are very lucky. Honestly, trust me. Okay. So now you see the market came back to retest this last bearish movement before continuing to the upside. So now the market continued to the upside. Okay, so yeah, the market created this high. Okay, and then came back to make this low and then continue this high, because this is the low we wanted to make before we actually go for a buy. Now, when it bought again, it broke another high. Yeah, this is where the market was, where we marked this out that the market was going to come and start buying from here. Now that the market is buying, what happened? It break the recent high too. Okay, the new high that was just created after this high. This is the new high. The new high got broken also. Now, the other opportunity you still want to look out for now is the last bearish movement of the market. What is the last bearish movement? This is the last bearish movement. So we are going to mark all of these areas out as the last bearish movement, and then the market will come back to retest it and continue to go up. Okay, so this is how you get opportunity in the forex market, right? And this is the ICT way I just taught you guys. All right, so the price action way, the general price action way is this. When the market is creating something like this, what you want to be looking out for is this. You want to draw something like this that will be connecting these lows. Okay, so let's assume that we have this low and then we have this low. So you want to connect something like this. Then let's assume this hasn't been created yet. Then you want to do something like this. Okay, you want to do something like this. Then you are waiting for the market to come back into this and then start to buy to the upside. Okay, so now every time the market comes into the trend line, the market will always go back up. Okay, so let's assume this is our resistance area. The market came down to this trend line and then it continued to go up. All right, so this is how to draw support, resistance, and trend line. Okay, so now this is an example for the bullish market. Let's do for bearish market. Okay, I think there's a way to actually turn this. All right, right? So I don't know how to do that. That means we have to restart all of this from the beginning. Yeah, we have to delete all of this and make a fresh one. So let me just do this. Uh, okay, delete. Yes. Let's leave those. Let's leave those, all right? So now let's say we have a high here. Let's say we have a resistance. Okay, we have a resistance. Let's say we have a resistance. Okay. So let's say we have a resistance around here, and the market is doing something like this after touching the resistance. Okay, coming down. All right. Sometimes the market will just do this, okay, and then it will continue to fall down. All right. Yes. So let's say we have something like this because of this resistance. Let's say we have something, we have a movement like this. Okay. I just want to make sure that this is properly arranged. So just give me a moment, guys. Okay. So now let's assume that no, this is this is drawn wrongly. Okay. That is not how I want my resistance to look like. So let me draw another one. Yes. Yes. So let's use this, okay? Now, look at this. The market is breaking structure to the downside. Okay? This structure was broken. That structure was broken. This structure was also broken to the downside. All right? You see? All these structures were broken to the downside. These structures were broken to the downside. So now we have lower highs, then we have lower lows. So let's clone this. But before we have a high, just like our previous example where we have a low, okay? We have a high here. This is the first high that was created. Then we have a higher low. Okay, so how is this a higher low? You see, it's a high that was created, but it's lower than the previous high. This is a high. This is a new high. This is a new high. But you see, it's lower. The high is lower than the previous high that was created. Okay. So every time a new high is created when the market is going down, then it's creating a lower high. Okay. Then we have lower lows also. So this is a low. Okay. Um, Aside that low, there's no any other low. Now we have a new low that is lower than the previous low. This is a low, but the market came down, okay, creating another low. Now this is a lower low. Guys, I hope you all are following. So this is a lower low, okay? All right, this is a lower low because the new low is lower than the previous low. All right. So now the market just keeps creating um, new lows, right? Then we have another low here. Then we have another low here. This is the lowest low. Okay. So now, every time the market keeps breaking structure to the downside, it will keep creating lower lows. Okay. And then we'll be looking for the sell opportunity. Okay. So how this works is, you see, when this market broke to the downside, the next opportunity you want to be looking out for is a sell opportunity. Okay. And where do you expect this sell to happen from? That is the last bullish movement. Because now we are selling, we are looking for the last bullish movement. What is the last bullish movement? This is the last bullish movement before the market was broken to the downside. So now that it's broken, you see, you want to draw this out and wait for the market to come back to retest it to sell down. Okay. The same thing for this also. Okay. You want to wait for the last bullish movement and then you're going to sell from the last bullish movement. So you see, the market just tagged in and then it continues to go down. So this is the kind of opportunities you want to be looking out for in the Forex market. All right. Then you can also draw your trend line. You can also draw your trend line. So let's assume we have something like this. You can have something this way. See, trend line connecting all of these together. So I think this is too much. Yes, could be like this. So let's assume this is how the market looks like. This hasn't been created yet. Okay, let's do this. Right, let's do this. So this is where you made the market. This and this has been created. Then you want to draw your trend line this way, waiting for the market to come into this line again. So when this market came here, sorry. Okay, so when this market came here, you want to sell immediately. Okay, you want to sell immediately. Now that you sold, you'll be targeting this low. All right. So you are targeting either this low or go below. Okay, if you have a confirmation that the market is going to continue to go down. All right. So guys, I hope you understand support, resistance, trend line, and break of structure now. So we've been able to cover many topics on technical analysis. All right. So now that we are done with all of this, let's go and practice everything that we've learned. Okay. So how can you get perfect in this is if you learn everything that you've practiced. So let's go put everything that we've practiced into use. All right. Let's go use everything that we've practiced. So now look at the market. You see the market is going up. It's breaking structure to the upside. Yeah. So let's use this current one. What is happening here? The market is going up. And while it's going up, what is happening? The market is breaking structures to the upside. Yeah. You see? Broke structure here. Broke another structure here. All right, broke another structure here. You see, broke another one here. Broke another one here. And this is the highest high. So now I want you to take a look at something. Every time the market breaks a high, what happened? The market will always come back to retest. So anytime the market is coming down this way, this is where you want to be looking for opportunity. Okay, you see, just the way we've um, just the way we did it using the during the illustration. So look at this. The last low, okay, the last bearish movement. You see, the market came down to retest the last bearish movement, and then the market continued to go up. Okay. Now the market moved up, breaking this new structure. Now that the market broke a new structure, what do you want to look out for? You want to look out for the last bearish movement. And where is the last bearish movement before this break? This is the last bearish movement. Okay. So now you want to mark out your last bearish movement like this. And what happened? The market retraced back into the last bearish movement and then moved up. Okay, it moved up again, breaking this structure. Okay, and when this structure got broken, what happened? You mark out your last bearish movement. Okay, from the top to the bottom. Now that is marked out, what happened? The market came back into it and then continued to buy. So it's the same way you are going to be marking everything. Look at this also. Look at this also. The market broke out here, and what happened? We have the last bearish movement. Okay, these are all the last bearish movement that happened before the breakout. And what happened now? What happened? The market came back into the bearish movement, and now it's going up. Guys, it's just as easy as that. All right. So this is how to mark out, your price movement, right? So as I've said, I've never used this strategy for newbies before. This is an ICT strategy. Okay, so if you are here today, consider yourself lucky. Consider yourself lucky for taking part in this lesson. Okay, in this lecture, where you get to know the ICT way of trading. All right. So let's just delete all of this and let me show you how you can do this using your trend line too. All right. So if you don't want to use this method I've just shown you, you can also use the trend line method. Okay. All you want to do is you want to mark out areas where the market has rejected. You see, market rejected this area, yeah? Market rejected this area. Market rejected this area. Rejected this area. Okay. So now we have 1, 2, 3, 4. So let's see if we can have a line that is going to be connecting them together. So we have the first point, we have the second point, but you see, it can't connect the third point. Yeah, we are okay with the second point. Okay, it got connected here also, and then see what happened. The market broke out. All right, the market broke out. So now the opportunity you want to be looking out for is a buy opportunity, because the market, there's no confirmation that this will come down now. Okay, the only confirmation for a sell here is if this market closes below here. Okay, if something like this happens, you see a wick and the body is above. So the body is above our trend line. That means the market is going to continue to buy. But now the candle came below, okay, and then we have a current candle which the body is still above the trend line. But if the body is below the trend line, then the market is going to sell. That is just it, guys. Right? So I hope you guys understand all my explanations. So if you have any question, please, now is the time for you to answer. For you to ask your question, rather, sorry. So if you have any question you want to ask um, about all my explanation on everything that I've been explaining from the beginning up until now, please ask your questions before we go offline. right? So if you have no question, then I'm guessing you guys understand everything that I've been talking about. So I would love to continue now. I'd love to continue. Okay. So now this trend line can also be drawn, at the top also. This is the lower trend line, and we drew this because this is where the current market is. Okay, that is why we use the lower trend line. We can also have the upper trend line in case the market decides to come up, right? Okay, so I got somebody asking a question. Beautiful. Okay, please, what's the best way to get a fundamental analysis regularly? Can we use a news site? Yes, you can use a news site. But if you want to get the way I make my own fundamental analysis, go and fund your account. Okay, fund your account on this live stream. Fund your account on my live stream. Fund at least. Okay, so let's do this, guys. Let's do this. Since we are talking about fundamental and technical analysis, if I'm able to get 10 people funding their account before tomorrow evening session, yeah, we are going to have afternoon session, yes, before the evening session. But I just want to adjust it. I want to make it a 24-hour offer. All right. So if I'm able to get 10 people funding $15 each before this time tomorrow, just 10 people, okay, funding from now till tomorrow, then I'm going to teach how I get my fundamental analysis. Okay, I'm going to show you guys where I get my fundamental analysis from. Okay, how I'm able to tell what is happening on the market on a particular pair that I love to trade. Okay, so guys, start funding. And if you want to fund right now, just go to the chat room. Okay, there's a banner on top of the chat room. There's a banner where deposit with benefit is written on. So click on that banner. It will take you to where you can fund your account. Guys, you have to fund on this live stream. Okay, if you want to fund, even though we are not here doing live, like right now, you can still come. All right, just go to that banner, click on it. It will take you to where you can fund your account. If you go and fund backstage, okay, so that you are on your own. Okay, if you go and fund backstage, you are on your own. All right, if you want me to teach this strategy, fund on this live stream. Okay, I just need just 10 people to fund. If I get more than that, no problem. All right, but if I have 10 people funding their account right now till tomorrow evening, all right, then I'm going to teach my fundamental analysis strategy, how I get my fundamental analysis and where I get it from. Okay, so even you yourself, you can always go there and look out for how you can read the market, and I'm even going to teach you how you can read the fundamental analysis. All right, so it's not that you just go there and then you see, okay, okay, you read the news. Okay, how do you understand the news? All right, there's differences between going to read news and then understanding what the information the news is passing out. All right, so if you want to get that, go and fund your account. So if you are among the 10 lucky person that's going to be funding their account before tomorrow evening, then you will be one of the lucky 10 people that I'll be teaching the fundamental analysis. All right, so guys, that will be all for today. All right, that will be all for today. This session is scheduled for just 1 hour, and we've exhausted the 1 hour. All right. So guys, go and fund your account. Let's do this again tomorrow. All right. So tomorrow I'll be showing you rejections and where you can actually enter a trade. Things you need to see before you can actually take a trade. All right. So guys, have a blessed evening. Sleep well. We'll see you again tomorrow. Bye for now.